Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in the TradFi, digital asset, and financial planning space. I'm your host, Jill Malandrino, and joining me on the desk this afternoon, we have Dr. Merav Ozair, global leading emerging technologies expert, as well as Rob Solomon, co-founder of DIMO, and finally we have Daniel McCabe, co-founder and CEO of Flexa, and they join us to discuss what DePIN is, what it means for the future of technologies, and if 2024 is going to be the year that blockchain use cases start to outperform traditional alternatives. It is great to have everyone with us. Welcome to MarketSite, welcome to Trade Talks. Rob, I'm going to kick it off with you. How are you seeing decentralized technologies benefiting customers?
Ultimately, it's all about participation. And users can participate, and there's lots of technology where users can participate, but even more importantly, it's that developers can participate. And people can kind of permissionlessly build on top of these networks in a really solid way. So you've seen in more closed internet infrastructure networks like Facebook, Twitter, Reddit, things like that, people will build some businesses and then the APIs get revoked, the business, deals change, all that kind of thing. And we have the ability to build really solid infrastructure that, I like the analogy of, it's like if you're building on, you could build with wood, you can build with steel. And with steel, you can build much more solid infrastructure. This was in Chris Dixon's new book on Web3. And we're building steel infrastructure that developers can build really robust use cases on, which is ultimately what's going to really benefit users.
Right, and Merav, that's really the strength of blockchain technology, giving control to users, especially when it comes to their data.
Yeah, I always, been advocating for Web3. And, when I'm talking, I've even wrote about, social media that, the Facebook, the Instagram and all of that, which are basically Web 2, which is centralized, and they control your data. And we had all these issues that we heard about with Cambridge Analytica. But even now, just recently, I think it was a week ago, just recently, Reddit sold the data. Because Reddit, I remember when I was trying to get into the API, they didn't have an API that you can try, but okay, so you don't have an API, it's not available for everyone to use. But they said, okay, we control the data, and now they're selling it for $6 million a year to Google to use it for now, the building, Gemini and the equivalent to ChatGPT, and so it's, and that's the whole point about, okay, this is my data, our data, and now the companies who we're using the services are using our data. They're monetizing it. They're not asking us because we top that. We agree, and that's a problem.
Well, Daniel, a couple questions here based on what Merav is saying. You're getting a service for free. There's nothing in life that is free, so there's going to be some sort of attachment that comes with it. So, how come consumers aren't understanding that, and why is that controversial? And then why is it controversial then when we have the decentralization conversation? It's like you want the best of both worlds, but nothing comes for free.
Yeah, that's super true. And some of the advantages of decentralized technologies can be clear. For example, there's a tremendous cost savings. For example, there's more inclusion. But that doesn't immediately eliminate some of the incumbents that are still there. Take, for example, the payments infrastructure. So for Flexa, since 2018, we've made it possible for folks to spend digital assets with merchants, but there's an existing payments infrastructure there. Debit and credit rails dating back 30 years before the internet was invented. There's many middlemen there. There's gateways that are locked there for folks to participate in. So breaking that down through decentralized technology takes time, and folks can see it. Folks can get it, but you still got to work through those incumbent structures, and that can certainly take a great deal of effort and work.
Yeah, so Rob, tell us about this concept of DePIN and why it's becoming increasingly popular.
Yeah, we've had digital infrastructure for a while that's kind of open and participatory, but with physical infrastructure, it's tended to be either controlled by the government in the case of roads, or large sort of monopolistic companies in the case of like cellular networks and things like that. And so what's interesting about DePIN is anybody can participate. We were in large part inspired by this project called Helium, where anybody could put up their own hotspot and contribute to a global cell network. And so it's like, imagine if you could just light up a Verizon tower in your apartment and get paid to send your data, and people are walking down the street on Verizon, they're swiping left, swiping right, looking where they want to go, and your tower is the one providing that data throughput for them, and you're getting compensated for it. So that's kind of the decentralization aspect of it. And as I mentioned earlier as well, not only can you feed into a network and participate in it, but that network can be set up in a more neutral and open way, such that there's not a company at the center that might have perverse incentives with the users or might restrict the pace of innovation by making everything kind of go through its pipes and its employees. These networks are built to be built upon by everybody, much the same way that the internet is right now, where anybody can, I could put up a website about puppies right now, but I couldn't do the same open development on Twitter or other types of closed networks.
Right, so Merav, if I understand it correctly, based on what Rob was saying, you would still need Verizon to exist at the end of the day.
Yes and no.
Okay.
Okay. Well, you can think about it this way, and this is why I'm saying I believe, that eventually, I mean, this is one of the ways to democratize all of these technologies, whether it's wireless, communication, storage, all the things, that AWS and Google, have all these storage and data centers, that could be democratized. Meaning, just give you an example. Let's think about storage, which I think there are already some applications like that. So now if you want to store your data, and you're talking about massive data, you have all the data centers with NVIDIA, and you have AWS and the Google and all of that. Now, if I'm talking about democratizing and the DePIN, which is decentralized physical infrastructure network, right? I mean, that's what it stands for, just to make it clear. So let's say I have a computer. Yeah, I can store, but not like what AWS can offer me or Google. But if, let's say, each and every one of us provide a little bit of storage from their computer. Everyone, there are, I don't know, millions, tens of millions, hundreds of millions of computers out there in the world. And each and every one of us provide this service. So instead of having AWS, then all of us can rent our computers, and we all have computers, and we say, okay, I'll just rent this much. Yeah, you need, I don't know, 10 gigabyte, but I don't have 10, but you can get, I don't know, maybe half from me, and half from Rob, and half from Daniel, and half from, all kinds of other people. And this is, and every one of us, being, renting that storage, being paid, and it's not centralized. It's decentralized. That's the whole point, that we are democratizing all of these centralized applications that exist today. So you don't need Verizon, you don't need AWS.
Right.
Because we are providing that.
So Daniel, how does regulatory authority impact the ability for larger companies and enterprises to participate in decentralized technology such as DePIN?
Yeah, that's a great question. So starting first with, for example, Flexa, if you're talking to merchants, if you're talking to large merchants, institution, enterprise grade, anything, the first thing they're going to see is, how are you compliant? How are you abiding by regulations that exist? Are you forecasting regulations that are coming? So for example, at Flexa, we had to build a KYC program. We definitely followed BSA regulations. We definitely followed OFAC sanction regulations. That has to be built first, knowing what those regulations are and what they can become. If you don't do that, you won't get enterprise grade merchants or any other institutions to work with you. So if you're a startup in this space and you're really looking forward, if there's no regulation there that's clear, you better do a great job of predicting what's coming and get to work on building it the right way. Otherwise, the enterprise grade entities will not play game with you. It just won't happen. But on the other side of this, if you have, for example, a jurisdiction, or if you have a government system in place in which there are some advanced thinkers and in which they want sort of the industry to move forward in a solid way, and I believe they are here, notwithstanding some of the delay in our own regulations, I think that can happen quickly. And I think maybe in our country it can happen with stablecoin legislation this year, which is a real good first indicator movement towards regulation.
Yeah, because that really is what the challenge is. It's not standardized
Right.
across multiple authorities, and especially with the delays that we have here. And I think that was one of the the challenges that Web 2 companies are seeing, is that many of them are domiciled here in the U.S. But if they want to do business in Southeast Asia, they want to do it in Europe. And we know EU has DSA, they have their AI.
Right. Yeah, and I can add on to that a little bit. So people might be surprised to hear that. I actually think we have strong regulatory tailwinds for our project. And I understand that crypto is a little bit fraught in the US when it comes to financial use cases. But for DIMO, what we are is we're a network that makes any car smart. You can connect it to our protocol, it's an open network, and people can develop applications for your car that are previously impossible. Cars are great hardware, but the technology, the software technology is behind. Autonomous vehicle stuff, great, but there's no app store, there's no smartphone, iPhone moment for your car. And the right to repair legislation, data privacy legislation, because it's a decentralized network, we put users in control of their data, and they get to decide exactly with whom and how it's shared. And there's not this company at the center kind of controlling everything. And we go directly to users with it, and they're kind of protected with right to repair. So in a lot of ways, we are the most viable path to a mobility network because of the credibility, the credible, neutral, and security guarantees that we can offer.
Does this decentralized framework, does it open up, Merav, to cybersecurity issues? If, like to your point before, if you can share your hotspot, right? Or if you can rent out some of the gigabytes available on your computer, does that start to open up a cybersecurity can of worms?
Just the opposite, because it is decentralized and it is on the blockchain. We all know about the immutability, security, cryptography. It's just the opposite. When people are saying, oh, it's going to be hacked. The hacks don't happen on the blockchain. They happen off-chain, not on-chain. And that's a misconception of people when they hear about hacks. I mean, yeah, they happen on centralized exchanges like, I don't know, Coinbase or whatever, which is centralized. It's not on the blockchain, but that's people kind of have the misconception. But when I'm talking about what DIMO is doing and Flexa is, you have a blockchain, you have a network on the blockchain which is very secure. It's much more secure than any Web3 type of network. And all these hacks that we hear, they are on the Web3, not on the, on the Web2, not on the Web3. So the question of security, I mean, people are thinking about it because they're thinking about Web2. They don't understand the concept of Web3, deep enough. And I think this is what is missing. And I think, people like you, that they have this application, I think this is one of the things that you have to advertise when you are selling your services, to say, we are very secure. We're not Web2, we are Web3. And the immutability, the security, the cryptography, and all of that, we should emphasize that. So you're getting decentralization, you're getting the control on your data, but you're also getting higher security.
Right.
Yeah. I would add to that. I mean, you can take, again, Flexa as a great example. Right now, payment costs, social costs of payments are something like 2% of our GDP. That's upwards of at or above $500 billion annually. So what we've done at Flexa, we've made it such that you can actually build this new digital payment rail, and through decentralization, through Flexa Capacity, which is a smart contract on the Ethereum network, we can globally decentralize risk of payments, which means that giant fraud risk, a lot of that cost that goes to risk, the incumbent players I talked about before, can be eliminated. So you can make it far more cost effective, which allows us to go to our merchants and tell our merchants, we can give you a zero guarantee. You will pay zero for fraud loss. And I believe we're the only payment company on earth that can offer that. And the only reason we can offer that is because we decentralize the risk of payments using Flexa Capacity.
Right. So it sounds to me we're almost talking about integration between, let's call it TradFi and DeFi, right? Because we're talking about payments here. So either, to me it sounds like integration, not necessarily either or perhaps DeFi as a pathway to get to Web3, but it doesn't sound like either or to me.
Yeah, I would strongly say it's not either or.
Right.
I think there's a lot of traditional networks, even traditional payment networks, that can easily integrate what we've built at Flexa. And I think there's others that will build similar things, but I just think right now we're the only collateralized payment network there is. We're the only one doing what we can do relative to giving those merchants that zero fraud loss guarantee. And there's no reason we can't integrate, and in fact I believe we should and will, with different traditional finance type enterprises in the future.
Right, and from an automotive perspective, would you say that it's more about integration versus in either or?
Yeah, and I would say with anything, in the 90s, it was like you're an internet company or not.
Right.
And now it's like every company is an internet company.
Yeah,
it's just
exactly.
a matter of degree, right?
Yeah.
So for what DIMO's doing, we are creating the bedrock of vehicle identity, data, communication across systems, and all kinds of things can be built on top of that. There'll be tons of, cars are interesting because they're in the physical world, so there's a lot of physical process. There's still going to be people getting in and out of cars. It's not like we're moving entirely on chain with every aspect of our lives and existing only in the metaverse. So
Not yet.
there will always be this kind of integration between them.
I'm sorry, go ahead.
I mean, to strengthen the points that were made here. I mean, when we're talking about the integration of TradFi and DeFi, you can think about what the traditional, what the incumbents financial institutions are doing. They're doing both. I mean, they're very much, they are, the TradFi that we know, the Goldman Sachs, the JP Morgan, the Citibank, they are TradFi, but they're all kind of just now moving into the DeFi, blockchain type of applications. And we just heard about, what was it, I think, announcement yesterday, that many major financial institutions are part of Canton. I think that's Canton. That is called the digital assets. This network, which is it's permissioned, network, but it's all about all this, whether it's Goldman Sachs and others, that they're moving into that. They are TradFi, but they're now doing also DeFi. So we can see that this integration, I mean, at the end, I mean, I think that what will happen, that we might have something in between. It's as was mentioned here, it's not either or. It's like, we can have the good of TradFi, which is the regulations, the security, and all kinds of other things. And we're going to have all the decentralization, the other benefits that we have with DeFi.
Right. So Daniel, the question is 2024 the year that we see blockchain-based use cases outperform traditional alternatives? It feels as if we have been having those conversations, let's call it end of 2022, 2023,
Sure.
and now that we're at that inflection point, clearly, TradFi, they're not going to cut off existing lines of business that have the revenue to support these newer areas of the business, but it feels as if they're starting to think about leveraging this technology and not looking back or perhaps maintaining older legacy systems.
Yeah, look, I mean, will it be 2024? Maybe. Is it close to 24? Probably. I think we all, can agree, I hope we can agree, blockchain technology is better for people. It's better socially. I even think it's better for the earth. I know that's a different topic for a different day. But it's just plain better. And because of that, blockchain technology will eventually, it's inevitable, it's going to rule the day in many different enterprises. So whether that's 2024, I don't know. This is a new cycle, and I think with each new cycle, it starts to grip a bit more, and it starts to stick a bit more. Will this be the one that it sticks? Possibly. Maybe it's the next cycle though, but it's close, it's super close. And I think we can see that with payments. It's getting better every month, quite frankly. And I think the more we get that kind of stabilization, and that maybe is going to look like it being just as easy, for example, to integrate a blockchain database as it is to pick a cloud server. When it gets that easy and we're getting closer, then yeah, I think you see blockchain technology start to move forward.
I mean, the fact of the matter is you're going to need the blockchain technology because with everything the way it interoperates, this has become a liquidity issue when it comes to payments, when it comes to settlements and so forth here. But we'll give you the last word here, Rob, in terms of how you see the automotive industry evolving, leveraging this type of technology.
Yeah, you saw in places that didn't have landline connections built, they just kind of skipped right to cell phones. And in automotive, again, great hardware technology, emerging EV and self-driving technology, but there's no Web 2 version of what DIMO's building. And so I do think we could be one that's on a fast path to break through, because if you do want to develop, actually, the original idea for DIMO was you would pull up to a parking garage, get out of your Ford vehicle, and the sensors in the garage would talk to your car and tell it where to go park itself. And it would negotiate with a BMW to move out, to move your Ford in, and there'd be this kind of shared digital infrastructure to communicate across vehicles. And how clearly impossible. You couldn't imagine how someone could build something like that, even with a very high budget. And I was at vroom.com, I could tell you how painful the titling and vehicle processing infrastructure is. It's tough. So we enable an entirely new category of things. And when there's real value that can be created, demand will kind of come in to accelerate the adoption of it. To the point about, is 2024 the year? People often underestimate how much the infrastructure on which you build your business matters. And with the internet, in the beginning, you couldn't put credit cards in. You had to derail your landline to connect to the internet, and it was very slow, and you had a big boxy Dell that cost $5,000. So as that got better, all of a sudden you see better and better internet applications emerge. With blockchain, wallets are getting better, the blockchains themselves are getting better, all the tools for developers are getting better, so we're getting closer. Is it good enough? It's getting there, and the benefits will start to compound more and more, and this could be the year.
All right, let's end on a positive note.
Yeah.
Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.